I think that in Q1, I think there are pretty good odds we're going to see silver back at $35. And I think anything from sort of Q2 onward, we could potentially realistically see something around 40 or north of 40. And I do think we'll have quite likely touched 40 at some point next year.
Peter Krauth, a seasoned precious metals analyst and author of The Great Silver Bull, holds a bullish outlook on silver for 2025 and beyond for several reasons. First is the metal's worsening supply deficits and increasing industrial demand. The silver market has experienced consecutive annual deficits, with demand surpassing supply by approximately 200 million ounces annually. Likewise, silver's industrial applications are expanding, particularly in electronics, solar panels, and electric vehicles. In 2024, industrial demand is expected to account for 70% of total silver supply, up from 50% in previous years. Solar panel manufacturing alone represents over 20% of global silver consumption. According to the Silver Institute's estimates in the 2024 World Silver Survey, the global silver deficit will rise by 17% to 215.3 million troy ounces in 2024 due to an expected 2% growth in demand, again led by robust industrial consumption, combined with a 1% decline in total supply. Additionally, Krauth believes that ongoing government spending and escalating debt levels will support higher silver prices. In 2025, central banks are expected to embark on widespread policy changes, swiftly moving from the quantitative tightening measures of the past 2 years to full-on money printing and other quantitative easing measures. Krauth is certain that silver prices will benefit greatly from these exercises. He estimates that the metal's price could reach $35 in the first quarter of 2025, and potentially $40 later in the year as the above-ground silver supplies are completely depleted and investors, including central banks and industries, scramble for the small supply available. In a recent interview with The Deep Dive, Krauth compares these interesting dynamics of the silver market to those of the uranium market, which has seen considerable price recovery in recent months, specifically as a result of rising demand and supply constraints. Krauth says these issues are equally applicable to the silver market, which is why he expects silver prices to soar significantly in coming years. We will now present clips from Krauth's interview. Before diving in, please remember to support our channel by liking this video, subscribing, and turning on notifications to stay updated on content related to precious metals and economic analysis. Thank you, and enjoy the video.
You know, I had said that I expected $35 in Q4. We reached that earlier this quarter. I'm not surprised. It was quite the run-up. If you look at, I think back in February, we were at $22. So that's, I think, something like a 45% gain. It's really pretty tremendous within this calendar year. So I'm not surprised to see it pull back a little bit. I do think that somewhere around the 28, 29, 30-ish is a floor. I have also said that I think that, once we make it meaningfully above 30, that 30 would become a new floor. So far, it's looking like that's kind of how it's playing out. So I think that, the odds are a lot more favorable for the upside than for the downside at this point in silver. And, I was talking about a little bit earlier about, doing research, understanding the market, and so on. And I think one really, really good example might be for people to look at what has happened in the uranium market, because that's been pretty fantastic actually for over the last few years. It's become quiet, but at a much, much, much higher level. And if you are interested and you pay attention and you look at what's going on, uranium has legs for the next, I'm going to say, decade and beyond. And it's comparable in a lot of ways. So I like to quote a really, really interesting thing from a really very smart guy, a highly experienced, really seasoned guy by the name Leigh Goehring. He's with Goehring and Rosenzweig out of New York City. And Leigh Goehring actually managed one of the world's largest commodities funds several years back. And so this guy knows what he's talking about. And So here's what he said. He said 5 years ago, we became uranium bulls because the market had quietly slipped into a structural deficit and reactor demand had been outstripping mine supply. So what happened was fuel buyers used what we call so-called secondary inventories to fill the gap. So they didn't have to pressure miners to produce more uranium. They were able to tap into these secondary supplies, these above ground stockpiles of uranium, and drain those inventories. So Gehring saw this and he said, well, guess what? All these uranium miners have scaled back because prices had been so low for so long, about a decade, and production was, very minimal at that point, and there was no pressure on the uranium price because the consumers of uranium were able to go and, as I say, drain these above ground secondary supplies. But what happened after that? So about 3 years ago, uranium was still at about $25, $27. Today, we're at around 77. We've been above 80, and we've been meaningfully around 80 for months, if not a year at this point. So I'd like to draw some really, really interesting parallels with silver, because if you understand what I just explained about uranium and where uranium went and what happened with a lot of uranium stocks because of this triple in the uranium price, you haven't missed a boat, because you can look at silver right now and you have essentially the same setup. So over the last 4 years, just quickly, the silver market is about 1 billion ounces a year of supply. About 85% of that comes from mining and about 15% comes from recycling. However, demand for this year and over the last 4 years has been well beyond supply. This year to the tune of 20%. So we're consuming 1.2 billion ounces, and yet we're only producing 1 billion ounces. So people have asked, and I've asked myself, well, in this kind of environment, how come silver is not $50 or $60 or something, much higher? And you really have the exact same thing as what happened in uranium. You have secondary supplies, so above ground stockpiles of silver. These are the identifiable stockpiles are actually sitting at the COMEX, the LBMA, the Shanghai Futures Exchanges, and in some silver ETFs. Beyond that, you do have difficult to quantify private hoards of silver. So if we put that aside for now, we do know at least we can look at and see what's happening with these measurable secondary supplies in these futures exchanges. And since early 2021, these exchanges have seen their supplies drop from anywhere around 40% to 70% in the last 3 to 3.5 years. It's kind of gone a little bit sideways over the last 4 or 5 months. But for 3 years, from early 21 till early 24, they've been dropping very, very, very steadily. So here's the parallel. The big consumers, I believe, the big consumers of silver, in industry, electronics, solar panels is the biggest one now, have been able to tap into these above ground silver supplies and buy silver, buy it at spot price, not put pressure on producing more silver to meet this excess demand over supply, and feed their need. And this supply is only going to last so long. When that runs out completely, then we're going to see silver just absolutely explode, and I think potentially do something like uranium did, which was to triple in a matter of a couple of years.